Welcome to the deep dive. Today, we're diving headfirst into the world of private capital.
Ooh, exciting.
We've got a whole stack of research and articles here.
Oh, wow.
And our mission today
Okay.
is to give you a clear understanding of this really influential part of finance.
I think a lot of people don't even realize how much is going on
Right, exactly. It's like we're going behind the scenes.
behind the curtain,
Yeah, like where the real action happens.
where the real money moves, for sure.
And whether you're thinking about investing yourself or just curious how companies like SpaceX or Spotify, got their start.
Oh, yeah. Great example.
This is the deep dive for you.
Absolutely.
So let's start with the basics. What exactly is private capital?
Well, at its core, it's any investment made outside of those public stock markets.
Oh, okay. So
Yeah.
not like buying Apple stock on your phone.
Right, exactly. Think of it as a kind of a parallel universe of investing.
A secret club, almost.
Kind of, yeah. It has its own rules, its own players, its own lingo, even...
Got it. So instead of buying shares of Apple on, say, the NASDAQ,
Right.
you might invest directly in a promising tech startup that's not public yet.
Exactly. Or maybe you're loaning money to a real estate developer building a skyscraper.
Okay, so there are different types of private capital. It's not all just one thing.
Oh, absolutely not. It's a whole spectrum.
So in our research here,
Yeah.
we keep seeing terms like private equity, venture capital,
Right.
angel investing. It feels like a whole different financial ecosystem.
It really is. Each one has its own flavor, you could say.
Yeah, different ingredients in a recipe.
Yeah, perfect analogy. So private equity, for instance, that's often about acquiring entire companies,
Wow, the whole thing.
or at least big chunks of them.
Wow.
And sometimes the goal is to actually take them private.
Take them off the stock market.
Yeah, to restructure, maybe fix some things, and then potentially bring them back to public later.
So it's not just about funding, it's about shaping a company's future.
Exactly. It's a very active role.
Makes me think of those big leveraged buyouts you hear about, like in the news.
Yes. The classic example is KKR's acquisition of RJR Nabisco back in the 80s.
Oh, yeah, that was a huge deal.
Huge. It was a landmark case, really showed the power and the risks of private equity.
Did it work out?
Well, it's a long story.
Okay.
They eventually made a profit, but it took longer and was way more challenging than they expected.
Sounds like a cautionary tale, but also, the rewards can be big.
Exactly. High risk, high reward, that's often the theme in private capital.
Okay, so that's private equity. What about venture capital? That's another one we see all the time.
Oh, venture capital, that's a whole different animal. This is about backing startups.
Like the really early stage companies.
Yeah, the ones with disruptive ideas, the ones that could be the next Google or Amazon.
So even riskier than private equity?
Potentially, yeah. Because you're betting on something that's completely unproven.
But the payoff could be huge.
If you pick the right horse,
Well-
yeah, the returns can be astronomical.
Wow, and I guess angel investing is kind of related to that.
Oh, for sure. Angel investors, they're often the very first outside money a startup gets.
Really? So before the big venture capital firms even get involved.
Often, yeah. Like giving someone seed money to get their dream off the ground.
So it's about more than just the money.
It often is, yeah. Angel investors, they often become mentors, advisors. They really believe in the idea.
So we've got these equity-focused pieces, right? Private equity reshaping companies, venture capital fueling startups,
Yeah.
and angels giving them that initial boost.
Like a whole ecosystem, right?
But our research keeps mentioning this other side, private debt.
Oh, right. Private debt is huge EE. It's like being the bank,
Right.
but for private companies.
Okay, so you're providing loans, not buying ownership.
Exactly. So generally less risky than equity,
Mhm.
but you can still get good returns.
And within private debt, there are even more specialized strategies.
Oh, yeah. There's direct lending, mezzanine financing.
Mezzanine, what's that?
That one's interesting. It's kind of a hybrid between debt and equity.
So more risk than a regular loan, but less than owning part of the company.
You got it. It's often used for specific situations, like acquisitions or expansions.
Okay, so we've covered private equity, venture capital, angel investing, and all this debt stuff. Are we missing anything?
Well, we can't forget about real estate and infrastructure.
Ah, right. Real estate. That's something everyone understands.
Yeah, but people forget it's technically private capital, too.
Because you're investing directly in a property, not buying it on some exchange.
Exactly. And it can be small scale, like a rental property, or huge projects like skyscrapers and malls.
And infrastructure, that's about roads, bridges, that kind of thing.
Right. The essential stuff that makes a modern economy work.
So it's not just glamorous buildings, it's the systems that connect to everything.
Exactly. And these are just some of the key types of private capital.
It's a lot to take in.
It is, but the key is They all play a role in driving innovation, supporting growth, really shaping the world we live in.
That's a great point, but why should someone listening care about this?
That's a great question, and that's what we'll dig into next time.
Sounds good. We'll be back with part 2 of our private capital deep dive soon.
Looking forward to it. Welcome back to our deep dive on private capital.
Glad to be back. So last time we laid out all the different types, like what private equity IS, what venture capital IS.
Right, all building blocks.
Yeah, but now I think we got to get into the WHY.
The why is crucial, yeah.
Like, why should anyone care about this?
Well, our sources point to a few big reasons.
Okay, hit me with them.
First off, the potential returns are a major draw.
Returns, meaning profit.
Exactly. Private capital often targets investments you simply can't find on the stock market.
So it's exclusive.
Yeah, and that exclusivity can lead to big gains.
Okay, I'm listening.
Think about the early investors in Uber or Airbnb.
Oh, yeah, those were huge.
They got in early, took a risk, and those who bet right, well,
They're probably living on a beach somewhere now.
something like that. But of course, higher returns always come with higher risks.
Right, I got to balance that out.
Exactly. It's not a sure thing. You got to be comfortable with the uncertainty.
But our research suggests it's not all about chasing those big payouts.
You're right. There's often a deeper motivation.
Like what?
Many investors are drawn to the idea of supporting companies doing something new, something impactful.
So it's about more than just making money.
For many, it is, yeah. It's about backing companies, developing groundbreaking technologies, creating jobs, maybe even tackling big social issues.
It's like being part of the solution, not just a bystander.
Exactly. It's about having a tangible impact, seeing your investment make a real difference.
Makes sense, but flipping it around, why would companies choose private capital?
Good question. There are a few reasons.
Lay 'em on me.
Well, for startups, especially the really disruptive ones, traditional banks might be hesitant to lend.
Really? Why?
Banks, they like stability, predictable cash flow, that kind of thing.
Which startups don't really have.
Not usually, no.
Yeah.
They're risky by nature, so banks often see them as too unpredictable.
So it's a catch-22. They need money to grow, but they can't get it because they haven't grown yet.
Exactly.
Yeah,
And that's where private capital swoops in.
like the cavalry.
Kinda, yeah.
Yeah.
Venture capitalists, for example, they specialize in assessing those early-stage risks.
They're more comfortable with the unknown,
Yeah, they understand that not every investment will be a winner.
but they're looking for that one that explodes.
Exactly. And it's not just startups either.
Oh, right. We talked about bigger companies using this too.
Exactly. Sometimes an established company wants to, say, acquire another company or do a massive expansion.
Big moves.
Yeah, and they might find that private capital gives them more flexibility than a bank loan.
Interesting. How so?
Private investors, they often have a deeper understanding of specific industries.
So they can move faster, make decisions quicker.
Sometimes, yeah, they're more agile, less bureaucratic.
And it makes me think of those infrastructure projects, like building a huge solar farm or something.
Great example. Those are massive, complex undertakings.
A bank might be hesitant to get involved in something that big.
Right. Too many moving parts, too long a timeline.
But private investors, they can handle that.
Exactly. They're often looking for those long-term, large-scale opportunities.
So it seems like private capital, it fills a gap, right? Provides funding where traditional methods can't.
Absolutely. It's become vital to the economy, supporting innovation and growth in ways banks simply don't.
It's like this whole hidden engine powering things.
That's a great way to put it. It's not just about money changing hands, it's about shared goals, a commitment to building the future.
It's a partnership.
Very much so. And that's why understanding private capital is so important. It helps you see the forces shaping our world.
The stuff behind the headlines.
Exactly. But we got to be realistic. It's not all sunshine and roses.
Right. No investment is perfect.
And private capital has its own set of challenges.
Like what?
Well, one of the biggest is illiquidity.
Illiquidity, meaning...
It means it's hard to get your money OUT quickly.
Oh, okay. So unlike stocks, which you can sell anytime.
Right. Private investments are often locked in for years.
So you need patience, a lot of patience.
You got it. And there's also less transparency compared to the public markets.
Less transparency.
Yeah, private markets aren't subject to the same level of reporting and scrutiny.
So it's more of a trust your gut kind of game.
To a degree, yes. You got to rely heavily on your own due diligence and the expertise of the people you're investing with.
So not for the faint of heart.
Definitely not. And frankly, it's not even accessible to everyone.
What do you mean?
There are regulations about who can invest. Often you need to meet certain wealth or income thresholds.
So it's kind of a high-stakes club.
In a way, yes. High stakes, high potential, but also high barriers to entry.
Well, that explains why we're doing this deep dive. Demystify it all.
Exactly. Give people the knowledge to understand this complex world.
Okay, so we've talked about the what, the why, the good and the bad.
A lot of ground covered.
But what about the future of private capital? How's it evolving?
The million-dollar question. That's what we'll pick up next time on the final part of our deep dive.
Welcome back to the deep dive. We've gone through the what and the why of private capital.
The nuts and bolts.
Right. But now I want to look ahead. What's coming next for this whole world?
Well, things are always changing.
That's for sure.
But one of the biggest trends got to be technology's role.
Tech is everywhere these days.
No kidding. And in private capital, it's like shaking things up.
So,
But-
are there apps for this now?
Haha, well, not quite apps.
Okay.
But you've got online platforms connecting investors with opportunities, streamlining the whole process.
So making it easier to get involved.
Exactly.
Yeah.
More transparent, too.
That's got to be good, right? More people understanding what's going on.
Yeah, and it's not just about convenience.
What else?
Tech's also enabling totally new investment strategies.
Like what?
Well, some platforms are using algorithms, even machine learning.
Fancy.
Right. To pinpoint promising opportunities, things even seasoned investors might miss.
So tech is leveling the playing field in a way.
In a way, yeah. Makes it less about who you know, more about the data.
I like that, but what about the funds themselves? Are they changing too?
Oh, yeah, big time. You're seeing online funds popping up, letting people invest with way smaller amounts.
So breaking down those barriers to entry we talked about.
Exactly. Could mean a huge influx of new capital into private markets.
Which could be good for everyone, right?
Potentially, yeah.
Mm-hmm.
More funding for innovative companies, more growth overall.
Sounds like a win-win.
Could be,
Yeah.
but got to be careful too, right?
Oh, right. Always a catch.
Got to make sure new investors really understand the risks involved.
This isn't your typical stock market stuff.
Nope. Still complex, still long-term. Education is key.
Knowledge is power.
Always. And beyond the tech side, there's another trend I'm super excited about.
What is that?
The focus on sustainability and impact investing.
So like doing good with your money.
Exactly. Investors, especially younger generations, they want their investments to align with their values.
Makes sense.
And this is pushing innovation in areas like renewable energy, sustainable agriculture, even healthcare and education.
So it's not just about returns. It's about making the world better.
That's the idea. Doing well, BY doing good.
Love that concept. It's like a virtuous cycle.
It really is.
Yeah.
More investors demanding impact means more companies focusing on those areas.
More opportunities to make a difference.
Precisely. Even traditional private capital firms, they're having to adapt.
So ESG, all that stuff we hear about, that's becoming the norm.
Very much so.
Yeah.
It's not just about maximizing profit anymore. It's about sustainability, social impact.
It's about the bigger picture.
Exactly.
Yeah.
It's really redefining the role of capital in society.
Wow. I think this deep dive has been super insightful.
It's a fascinating world.
We've covered a lot, the different types, the pros and cons, and now these trends shaping the future.
Lots to think about.
For sure. Any parting words of wisdom for our listeners?
I'd say this. Private capital is no longer this exclusive club.
Right. The walls are coming down.
Exactly. It's becoming more accessible, more aligned with values.
So if you're intrigued, what should people do?
Learn. Do your research. Explore the options. See how private capital could fit your goals.
Whether it's financial, impact-driven, or both.
Right. It's an exciting time to be involved in this space.
I agree. Thanks for guiding us through this deep dive. It's been a blast.
My pleasure. Always happy to talk private capital.
And that's a wrap on this episode of The Deep Dive. See you next time for another fascinating exploration.